Okay, this is video 5 in this series. This is video 6 of the series. It's the 5th video where I'm going over the technical breakdowns. The first video is just an introduction. And for those of you who didn't see any of the other videos or saw some of them but not all of them, this is a sequential explanation, video by video, step by step. So you're going to want to go back and review or watch the first videos, I should say. If you haven't watched them, you'll probably be confused. But if you watch them, this will make more sense. So please view them in order if you haven't done so already. Now, at this point, what we're looking for, guys, is we've determined first of all, our daily supply zone. Number one, we've also determined that it's a virgin zone. In other words, it's a zone where prices never trace back up to. That means that anybody who bought in here, if they're a larger institution, and most forex trading is conducted by larger institutions, as we all know, retail trading only comprises at maximum 10% of the volume in the forex market. That means 90% are large institutions, and large institutions generally don't make impulsive buy and sell decisions. So if they find out that they're wrong, they'll wait generally more patiently than most for price to get back up, or they'll reduce their position or something like this. So we have a good likelihood of price turning around and stalling when it gets back in this zone. That's number one. Number two, we also figured out it's high compared to last week in terms of where most of the buying and selling was done, because it's above the 61.8 fib retracement level for the high and the low of last week. We know that above 61 and up to 100, that's basically where there was an overbought condition. Not in terms of an indicator like a squiggly line or a stochastic or a RSI or a MACD or something like this, but in terms of actual overbought, because price turned down from there. That's how we know it was overbought, because price dropped. And consequently down below this 38.2, we know it was oversold. How do we know that? Because that's the point of origin of where price moved up from. So we like to basically take longs below, in the bottom two areas of the fib, and we like to take shorts at the top two levels of the fib. Okay. This video is going to discuss basically previous daily highs and daily lows, and previous weekly highs and weekly lows, but with an emphasis on the daily. So basically, I look and I try to determine where I will look in this daily supply zone, and I will see if there are any daily highs or daily lows that occurred in that zone as I go back all the way up to the top. So I'll just start going through this process. So basically, the high of this candle falls within these two blue lines, and the high of this candle is 0.570. And as you can see, it almost perfectly matches the 78.6% retracement. Okay, so I'm going to pay close attention to 0.570. I'm actually going to draw a little rectangle there to kind of denote that that's a high for that period. And let's see if there's any other highs. Well, of course, we have our weekly high, which was also the daily high, which falls right between our two yellow lines. So this is your best trade entry for this coming week, is going to be a short in here. It's the most overbought. Okay, it's where price truly ran out of buyers and only found sellers at a very high, at the level for last week. We have a weekly R1 lining up here, and also a daily high for the 4th of October was made within this two yellow lines, this dotted yellow line there. It's kind of hard to see. It's basically the blue line and the dash yellow line right under it. That's our supply zone, and then our other supply zone falls down here. And in this supply zone, we have the daily low of that October 4th candle starts there. So really within this, daily lows and daily highs are fairly significant, and you often see price turning or reacting around them again. So we have pretty much three of them. We have a daily low here, we have a daily high here, and we have another daily high here. And I don't go back any further because now I'd have to be going back down the move. And I always make sure if I'm looking for daily lows or daily highs, I'm only taking the lows and highs that fall within the zone, that are moving basically as prices moving back up. Once if I have to cut through candles to find those daily highs or lows, they're not as significant to me, and I don't use them. Like, for example, if we say here's a daily high within our daily supply zone, well, the problem is we have to cut through this candle to get there. This one, we have, from here to there, there's no cutting through any candles. So in other words, basically you find the highest point and you only take the candles to the right of it to determine your valid daily highs and daily lows. Okay, so we have this rectangle here, this bottom line, and this top. Now, the way I would trade this, essentially, now we are starting to have a third zone form. Okay, is I would be watching price, and to be perfectly honest, up in this area, I could pretty much put a sell order right around 0.595. And a stop around 0.6, 65, just a little bit above the high. That's about 70 ticks. I could put a sell order there for 70 and put a target of 70 or 100 or 140 or something like this. Get 1 to 1, 1.5 to 1, 2 to 1, and just set that up and forget about it. They call this Sam Seiden refers to this type of trade as a set and forget. And this is a strong enough level that it's got such a there's so many reasons for price to turn here and have a reaction, at least 1 to 1, I would say. You could literally just set an order up there and forget it. And so I guess as this week plays out, we'll see if that's indeed the case. If price reaches that level this week, we will see if that's correct. I'm also going to be starting a log, basically that dictates these trades and these zones in the thread that I've got started on Baby Pips, where the links to the video are. And in that thread, when it comes to set and forgets, I'll go ahead and write those out so we can actually kind of see how that plays out. So you can kind of see a track record of how successful this method is, or how successful it isn't. So there's that. Then we also have this zone right here, this little gray zone. So the way I would play it is, here I would like to see how price moves when it hits the level, and I would possibly go short. Here I would maybe take a quick scalp to the short side. This would be something I'd be trading real time. This one I might set up and leave alone for an afternoon. I would be checking this probably every few hours, to see if it triggered, and then see how I would basically take profits after that. But it would be, let's just say, a set and manage. This I would neither set nor manage, or I would not set it. It's not something I would just set. But if I saw price get there and I happen to be watching the chart and I saw it start to react, I might take a quick scalp on that. It might be good for 100 pips, but I would probably take it for just a bit. And up here in this zone, it's so solid I could set an order to sell off here, put a 70 tick stop, and 100 tick target, and basically just go to Fiji for a week or two or 3, and I would say there's probably about a 60-65% chance that this would make 100 pips before it gives back, before it got stopped out at 70. So that's a very high probability trade there. So this is basically covering daily highs and daily lows. So we have a daily high in the zone at the high point there. We have a daily low basically right here at the beginning of our daily supply zone. So that's encompassed pretty much by this yellow, these two yellow lines is this zone here, this circle, and this circle for between this yellow line and there's a yellow dotted there. It's really the blue line. It shows stronger, but so again, now we have another indication, because we do have a previous daily low there, a previous daily high there, and a previous daily high there at the very top. And so again, that's one more probability, that's one more edge that you stack in your favor, basically looking at daily highs and daily lows. Price is more likely to turn around those. So that concludes this video. Next I'm going to cover this is going to be I think the 6th or 7th. The next video will be the last video of this segment, covering some of these concepts in general. And it's basically how I use Fibonacci retracements in the traditional way. So without further ado, I'm going to stop this and we'll move on to that one.